Good morning, good afternoon, good evening, and welcome, depending where you are on the planet. And welcome to today's Tuesday, the 15th of March, Bull versus Bear webinar with Steve Marley on the call for trade day. So welcome everyone, welcome traders. We're going to go through our usual, normal, regular run through in here today. Take a look at what's impacting financial markets right now. Take a look at some of the headlines, the geopolitical risks, the macroeconomic threats, and also take a look at the calendar, see if there's anything interesting on there that we're going to need to focus on for today, and what we've had and what we've got coming up, and then also take a look at the charts to see what's interesting on the charts. So I'm going to kick off with Bloomberg's 5 things you need to start your day. The US edition in here. So 3 Eastern European EU member states are going to the Ukrainian capital today, this morning, to speak to the Zelensky, the president of Ukraine. So brave of those guys, but they're going there. So that's a positive. We're also seeing high-level talks between US and China. First talks in here since the invasion of Ukraine in here by Russia. No specific outcomes were announced, but the talks were described as substantial. So possibly a positive on that. And then in here as well, we've had the retreat in commodities and sell-off in China's global tech have weighed on equities. So commodity prices going lower, it's kind of the correlation has been higher commodity prices equals inflation, stocks lower. But also now with commodity prices going lower, we've actually then had that negatively starting to a little bit hit on equity markets now. Because those commodity stocks are not doing so well. And also we've had this big tech sell-off in China, which has continued overnight in Asian time. And so we saw NASDAQ in here. The futures went lower in here, went lower yesterday, closed in a bear market position for the first time since the onset of the pandemic. So we've had a bear market signaled on a closing basis by the NASDAQ future yesterday, and NASDAQ went lower again this morning. We'll take a look at that shortly in here. But we've got another thing in here to point out is in China in here, another round of lockdowns. Tens of millions of people locked down because of resurgent COVID-19. And we've got obviously the Fed coming up tomorrow as well. A lot to focus on in here at the moment and potential things about to hit the market. Let's take a look at the calendar in here. Oh, hopefully I'm not going to pick up myself talking in here. There. No, thank God that didn't happen. So in here we have had some important data in here out of Europe today. So we've had the UK employment report. Now the UK employment report in here came in stronger than anticipated. Okay, so we had the unemployment rate down at 3.9%. Claimant count was better than anticipated, and the average earnings higher. And obviously the average earnings are going to be a bit of a negative. Average earnings obviously being higher in here, again adding into potential inflationary pressures. And all of this, showing a really strong labour market. And I think there's an article in here. Yeah, so UK unemployment falls below the pre-pandemic rate. So obviously employment spiked through the pandemic, but the jobless rate was a super low anyway going into the pandemic. And now the jobless rate falls to a new 2-year low at 3.9%. So all of that very positive, showing the strength at the moment anyway in the global economy. We also had this German ZEW survey. So this is a economic sentiment survey. Much watched. It's been much watched for many years, for many decades since I've been in the market. The German ZEW survey, and the interesting thing about that is it came in at minus 21.4 versus the 22.5 as expected. So worse than expectations. Okay, a very poor reading, close to what was expected, but still worse than expected. So that wasn't good at all. And then we also had in here from the ZEW themselves, they made some comments in here and they expect stagflation in coming months. So on fairly short term, I don't think they've gone into actual details in here, but expect stagflation in coming months. So that will be a real negative. Expecting a recession is becoming more and more likely. If we're going to get recession in Germany, right? So this is, remember, German. If we're going to get recession in Germany, that means we're going to get a recession throughout Europe, likely into the UK, and potentially then global as well. So real concerns there from that German ZEW survey. So those are all very negative in here. We're kind of covered through what we've got in here. So going back to the calendar, going into this afternoon, nothing of significant note in here out of the US. We do get PPI data out of the US today, but that doesn't often have a significant impact on markets. A couple of things, sorry, whilst I'm on the, kind of finishing off here on the calendar, a couple of things that are kind of calendar related. Okay, you guys should definitely 100% be aware of. One is we've been putting notes on the members area of the site about particularly a lot of you guys are trading the indices. A lot of those indices have rolled or are in the process of rolling from the March to the June contracts. Okay, now so James has put stuff and links to the various places you can go to see about the roll and how you can see what the front month is and how to move on to the front month. So do check that out. Do check the videos out for those in here in the either the trading room or in the forums, or you will see them also on our FAQ. So those have been posted around the site. Please do, you should probably be trading. I mean, there is still some liquidity in the March contracts on, say, the S&P and the NASDAQ, Dow Jones. However, really at the moment, the front month now has rolled to June. And so there's more volume or open interest in the June contracts. So you really should be trading on the June contracts. And I'm going to be focusing, I mentioned this yesterday on the webinar anyway, I'm going to be focusing on the June contracts when we do our analysis on the charts for the stock indices. So that's one thing to mention about the change in daylight saving time. The other thing you'll notice that we've started earlier, if you're in the UK or in Europe or anywhere else apart from the US. So the US changed their daylight saving time. Definitely US, you will notice no difference. We're starting at the same time as we usually do US time for you guys. However, I'm actually starting here 1 hour earlier in the UK. So because we want to get the webinar done and out of the way before any data that we have that we've got, for example, this core PPI data. That data comes out most days in here at 8:30 Eastern time, okay, and at the moment we're just after, we're at 7:39 Eastern time. You can see up here, you see GMT -4. That's usually GMT -5, right? So there's only 4 hours between Eastern time and GMT at the moment. So we're starting the webinar. So if you do follow the webinars live and you've come on maybe an hour later in the UK and there's no webinar, it's because I'm starting them an hour earlier. So we're going to be 11:30 GMT, and that'll be for the balance of this week and for next week. Okay, so this week and for next week, because we are it's up until then that then the European and UK clock, the daylight saving time kicks in Europe and UK in 2 weeks time on the weekend of the, I think it's the so it's the 27th 28th, something like that. It's that weekend, so in 2 weeks time. So until then, for the rest of this week and for next week, if you're in UK or Europe, we're going to be starting the webinar 11:30 GMT. If you're in the US, it's the same time as it always has been for you guys. Okay, so that's the data. Core CPI, PPI, as I say, PPI never really very much the kind of the poor cousin to CPI, not really looked at anywhere near as much as the CPI data. But nevertheless, if it's significantly out of line, that's going to be important. President Lagarde of the ECB President Lagarde, she's speaking later today. So keeping an eye on that potentially as well. That's 11:15 Eastern time. So that could be interesting. Obviously, we're keeping an eye on anything that comes out of Ukraine as well. So what do we have in here? Some few other things I want to run through with you guys. So relentless selling in China stocks evokes memories of 2008 crashes. Stocks in China getting absolutely battered in here. The tech sector in here, but really not seeing any real contagion threat. So markets are we're not seeing the contagion. We're not seeing markets in the rest of Asia, to some extent in Asia, but not significantly seeing contagion effects. So like Chinese shares listed in Hong Kong did sink lower, 6.6% in here. and following the previous session was the biggest plunge since the global financial crisis. So Chinese stocks are getting hit, but we're not seeing a contagion into other Asian stocks. We're certainly not really seeing contagion into European US stocks. They're not following them down. Obviously, I'm not saying they're not lower. European US stocks are obviously lower, but for different reasons, not because of this tech-led sell-off that we're seeing in China. Although part of it is being driven by concerns about links with China's links with Russia, and then so we're seeing liquidation because of that. But it's not primarily being driven by the same factors that are driving US and European equity markets lower. So futures markets in here have been lower. They actually rebounded overnight last night. Futures markets and European futures markets rebounded. Started on where we're looking to be on a positive footing from overnight. Then early on the European session, markets were back lower again and opened up lower, and then since then have tried to rebound. So markets were after the US, since the US closed, markets have been back up, back lower, and back up again. So kind of choppy, and so wavering is probably a good word in here. Oil significantly back lower again in here, though. We broke back down below $100 yesterday on WTI, and deeper below $100 as well in here today. So some of that oil pressure being taken off, the inflation pressures from oil and energy being taken off markets in here. And European stocks also decline. Investors will weigh inflation, Fed risks. We know this. This is nothing new, right? They've been weighing inflation risk. They've been weighing Fed risks in here, and the risk of a more hawkish Fed. And here we look at the markets at the moment in Europe. These are the European exchanges. We're down about 1% overnight in here since yesterday's close. But we go take a look at the stock indices in here. So we closed obviously lower yesterday, but if we look in here, the Dow and the S&P and the NASDAQ in here, futures in here, all having rebounded. So they rebounded, they went back lower, and now they've rebounded again. So, and actually on the way back up now. So what else do I have in here? Tech growth stocks lead. So this was a recap from last night. So last night, tech and growth stocks were lower. Again, because the focus on interest rates, and we spoke about the interest rates. We'll come and look at the chart. We'll look at the yield chart. There is growing concerns, of higher yields. Bond markets are selling off to higher yields. They're not going bid. They're not bid from the safe haven bid that they were getting previously. So we'll take a look at that shortly. What else do I have open up for you? Shares fall as war, COVID, and rate rises batter confidence. We know that. Nothing new there. Oil tumbles, same from Reuters in here. Oil tumbles to 2-week low on Ukraine talks. So we are seeing some talks. We are seeing some potential progress on talks. They're getting some very small green shoots. Okay, nothing really super positive, but we are getting some slight positive coming. And again, look, euro rises on hope of progress in Ukraine peace talks. So we saw a statement yesterday evening, that helped buoy markets yesterday, saying that they expected some kind of ceasefire peace talks to maybe be fruitful in the next couple of weeks, and certainly by May. So all of that is, it's looking further down the line. But the fact that they're saying that there's a positivity is all good in here. Let's just look at the Fed in here, and what we've been looking at. Nailed on. This is for tomorrow, just basically 100% now for a hike tomorrow, and then we're going into the next meeting now. Though it looks like the market's starting to price in almost like a 50-50, but now expecting a bigger hike, more chance of another hike. So we're looking at not only, so obviously this would be another 25. So we're expecting 25, obviously, at this meeting in March. For May, we're expecting then another 45% of another 25. So to take us up to 50 to 75, and potential for us to be up to a 50 basis point hike in 0.5% hike at the next meeting after this one. So obviously you've got tomorrow's meeting, and then tomorrow's result, and then we have the next one in May. So market's starting to price in a more aggressive Fed, and that's being echoed in here. So if we go and take a look at something we started on yesterday, if we go and take a look at the bond market in here, so the bond market was already lower yesterday, plunged lower yesterday, and this plunge lower in bonds, lower bond prices. Remember, lower bond prices. This is the June 10-year. Lower bond prices equals higher yields. So we've seen markets move to significantly higher yields, and those significantly higher yields in here, breaking down through the previous high low prices, higher yields in here from February. So these significantly lower prices, higher yields, way more in the tech sector. This was what that article was talking about, with the tech sector significantly lower. Let's take a look at what we're seeing on. I'll just make these a little bit bigger, actually. So in here, this is what I was talking about last. So, you know, yesterday, so the S&P, first of all, remember June contract, ESM2, okay? ES is the code, the E-mini, June, and then 2 for 22. So the market in here selling off yesterday, lower again to kick off the week. In here, we did get a little bit of a rebound. You see much lower and then rebounding, solid rebound. And if we step into the 30-minute chart now, I know most days I'm coming on here bullish and the market continues to break and go lower in here. But I mean, and again, look, the market's trying to put in a base. So in here, if we go back to where we were in here yesterday evening. So let me go to yesterday evening. So here's the sell-off going into the US close in here. Market closed fairly weak, and then we got a little rebound after the close and a further rebound overnight, and then into the European morning the market's plunged back lower in here and then had a really strong rebound. So we've recouped the losses. And if you look already on the daily chart, you know, this is a positive hammer type candlestick or a dragonfly doji at the moment. Now, as you see, there's a long way to go. This could end up as a big bearish Marabuso candlestick and be all the way down here. However, at the moment, we can only trade what's in front of us. At the moment, the market is showing on the daily chart a positive candlestick, right? And then if we look on the intraday, we've got a little kind of sell-off and rebound, you know, market trying to make a base. Now, I can't get, you know, too bullish on this until we start to take out the peak in here, the peak from overnight, which is up there on the June contract. We're up at 41.8275. Until we get up there, it's difficult to get super bullish about this, right? So I think, you know, that's kind of the trigger to be more bullish going forward. But, you know, if I step in a little bit further in here and we go into something like a 5-minute chart in here, you can see now we've got higher highs and higher lows. We've taken out one of the overnights. So remember, I said that the market was we rebounded, strong rebound last night. This was last night, and then the market back, and then this morning, and then the market back lower in here, and then all the way back higher in here. So you kind of created almost like a double bottom in here, you know, kind of some kind of almost like a W formation, or maybe inverse head and shoulders in here. But there's definitely a bottoming pattern in here, and obviously what you really need is qualification above that peak. That's the overnight peak, as we said there, 41.8275. We've just had, you know, on this the 5-minute chart, higher highs and higher lows. We've just had another swing back lower, and the market trying to swing higher. If you want to be more aggressive, you maybe just go with a long as it breaks above the current rebound high, which is lower than that peak up there. That's at 41.78.5. You know, so yeah, I mean, I think there are opportunities. However, you know, I can easily see the bear side, and you know, if you're on the 5-minute chart in here, you've got the uptrend line. This is more accelerated uptrend line. Let's actually get that on the low, and then I'll extend that out. And there, boom, look, the market's flirting with that uptrend line, okay? Flirting, it's a good trend line as well. You've got a point, it's drawn off these 2 points here on the 5 minutes. You get a third magical, almost exact touch there. The market comes very close to touching, impulsively losing away, and now flirting. I think really the break is going to be now below either the lows here, the recent lows, 41, where are we? 41.66. We break through here. It's looking kind of negative. Breaks through the high, as we said, 41.78.5. It looks bullish. So that's kind of your very short-term breakout points in here at the moment. Let's have a quick nod to the NASDAQ. Going to be similar, obviously. So again, you see the NASDAQ lower and back higher. Dragonfly doji positive. Let's step into the 30-minute chart in here. Again, ultimately, you want to get a bug above the swing high from overnight on the June contract, 13,140.25. That's where I would say we really have to get back above. But again, you can see there's the recovery overnight in here, and then back lower and back higher again. If we step in a little bit more and we go into like 5-minute chart now, then you do again have like this double bottom, you know, pattern in here, some kind of basing pattern, whatever it is. You had that spike high and then the market coming back, you know, but we're above that now. And then again, you got the same trend line in here that comes up from the low on the NASDAQ through here. And you see we're defending that trend line at the moment. So see the market, and again, look, multiple kind of approaches, and then market rallies away, flirting with the trend line. Again, I think above the recent high of this high here, you've got a couple of highs here on the NASDAQ, either 13,110 or up there, 13,122.5 for trigger points, and then ultimately that one over there from overnight, 13,140.25. On the downside, if we undercut the kind of current swing low, that's down at 13. 078, or this low in here. See this little low in here? So you had a pause in here. So this low in here, I think 13, 07275, below either here or here, signals then this recovery is over, and then we're back, pushing back down into this zone in here. So those are short-term trigger points for me. Let's take a look, a quick nod to the commodities in here. So oil, so this is gold, first of all. Gold continues its decline. Now, we stayed bearish on this yesterday, closed bang on the lows, open up big marabou. So it's difficult to sell in here now because it's just been, look, steady. We pointed this out yesterday. Head and shoulders, topping pattern. We pointed it out yesterday, looking to be short in here. And the market's just been down, really steady downtrend. It's rebounding in here at the moment, maybe a potential to sell. But if you go take a look at the daily, it's done a lot of work yesterday and today already. I'm a little reluctant to sell. You're getting towards oversold territory on the daily chart, on the 30-minute chart. We've corrected from oversold. So there is an opportunity to sell in here. You've got the trend line in here again. Probably looking at this one of here, I would say. Oh, let me just grab the trend line. This one in here, this comes from, so this is, remember, just on the 30-minute chart. This comes from the 13th of March off this high. Probably through there, and you've got a more accelerated trend line as well. Comes through here, through there. So yeah, I mean, anywhere back up towards on gold, 1934 to 1936 kind of area is your sell zone on gold for me. Let's take a look at the oil chart. So again, very similar to the gold chart. These are mimicking each other at the moment. Big sell-off, nearly closed on the lows, and then much deeper sell-off in here. Down towards $90 in here now. Yeah, real risk lower in there. And again, we go to the 30-minute chart. And here, look, another plunge just lower. Looks much worse than oil, than gold. Sorry, lower lows, lower highs. Another plunge lower in here. Difficult to sell though with it down as much as it is on the day already. But nevertheless, it's still looking pretty bearish in there for oil. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do stay safe out there. I'll be back with you with another bull versus bear. And remember to roll to your June contracts on your equity indices. And remember, going forward, if you're in Europe, UK, remember the 11:30 GMT start for the webinars going forward for the balance of this week and for next. Take care. Stay safe. Bye.